OK, well, let's bring it back home and a bit more of the domestic side of this, because insurance companies this week showed that they are capable of being able to pass the inflation they're seeing when they've got claims where they have to either rebuild a house, an office, a building, or indeed try and repair a car. We spoke with Steve Johnston, who is the chief executive of Suncorp, earlier this week. Here's a little of what he had to say.
Surprised and disappointed, Ross. I think it would be fair to say. I mean, we've spent a fair bit of time with a lot of evidence that we put before the ACCC, and it wasn't beyond the bounds of possibility that this would have to be referred to the tribunal. We went down the merger authorisation path with ANZ with that in mind. We believe that in the absence of the ANZ proposal, if that were not to be able to be executed, then the next best option for us, which is the one we would pursue, would be continuing to own the bank, and we will do so if that's the case.
So, Steve, he's obviously talking there about the ACCC knocking back the proposal that he'd be able to sell Suncorp Bank to the ANZ. But this really goes to the whole narrative about trying to concentrate in that insurance sector to try and have the capital that he needs to basically make certain that any natural disasters and the increasing cost of claims can be well and truly covered by the capital the business has.
Look, I think the ACCC has every chance of losing at the end of the day there. History would suggest that the laws don't quite back up what the ACCC would like to be doing. I think as a customer and a consumer, as a country, though, we should be looking at the laws and saying we have a very, very, very concentrated banking sector here, probably the most concentrated in the world. And if it were me setting sensible policy, I'd be saying none of those big four banks can be buying more market share here in Australia, because it is quite clearly, from my perspective, not going to be good for consumers. And I think you're seeing some of that in the very concentrated insurance space as well, where not only are they passing on prices, but they're making pretty healthy profits at the moment as well. So I think it's a whole space where the government should be looking at what sort of laws they need to pass to give the ACCC a little bit more power here. But I think the insurance sector is managing this inflationary environment quite well from a shareholder and investor perspective. I mean, we've probably all experienced it on a day-to-day basis that those insurance premiums are going through the roof. That is a function of rising costs, and it is a function of their pricing power on the other side of that as well. They're able to pass it through pretty quickly. There's a little smash repairs company called AMA that's on the other end of all of these negotiations, and if you look at its share price, you'll see that they have not been benefiting from this environment, because they have these contracts with insurance companies that were set at much lower prices. But it's clear that there is more inflation that needs to flow through that particular part of the market, simply because most people are signing premiums that last at least a year and sometimes 2 and 3 years, where we're yet to see that inflation flow through.
Well, Steve Johnston, we'll try and get you back on during this profit reporting season again to get that analysis, because it is just fascinating. It's a real microcosm of the way in which our overall economy is working. Steve Johnston from Forager Funds Management, many thanks for your time today.